This is Eric Muathe, Muathe.com, with a quick follow-up video, and I'm gonna link the previous videos in the description of this video so we can kind of keep this on the brief side. So check the description of the video for the previous videos as relates to this topic. And here we have a perfect example of what I was talking about. We can see a weekly closing high right there, and that precise price level was at 6.61, which again is this weekly closing high. So at some point in, let's say, September here, there was a breakout attempt that failed. As you can see, it went above it and then dropped, and then there was another attempt here. Now what happened is we formed a new weekly closing high, and the new weekly closing high was at 7.75. So right here. So once the stock goes back to the base, you have a couple of options as I have been discussing. Once it goes back to this base, my point here in the last couple of videos as relates to this subject is you can actually use the 6.61 weekly closing high. Excuse me. So here we have a 1-year weekly, and you can see what I'm talking about. So instead of using 7.75, which is this weekly closing high here, I'm saying use the 6.61 as the buy point. In other words, the 6.61 has not really been taken out because there was a failed breakout here and another failed breakout attempt here. So instead of waiting for this breakout here, which might be down the road if it's going to happen, you can take this breakout, because what I'm saying here is it, in a sense, remains valid. So previous breakouts can still be valid breakout entry points as a way to cheat your way back into the stock. Now, of course, if the stock is going to go and trade substantially higher, let's say in the teens, 20s, and 30s, of course, it's going to have to clear 7.75. So 7.75 also becomes a logical future entry level. And again, you'll notice if you actually go to the monthly chart, which is what we have here, the monthly chart more than often will give you an earlier entry point. And here the entry point is at about 6.65. And so you don't have to wait for that weekly breakout at 7.75. You can actually use the monthly and trust that by the end of the month or by sometime next month, the RSI is going to be where it needs to be. In this case, 3-year highs or above 69.1. We can see that the MACDs, for the most part, we can say the MACDs are trading at 3-year highs, which meets the minimum requirement. So we need a little bit of a more push in price so that the RSI can trade to 3-year highs and or the RSI move above 69.1. But the video was for how to account for previous breakouts. And my point is previous breakouts that have led to unsuccessful breakout attempts can still be valid entry points. In other words, the market tried here and failed, tried here again and failed. It doesn't mean that a future breakout attempt cannot be extremely successful. Eric Muathe, Muathe.com. Love light, light love. Namaste.